Perfect. Welcome, everybody. So, wake up. It's going to be exciting now. We are addressing the most important topic of the industry right now, stability, getting growth back, and talking about stablecoins and CBDCs, central bank digital currencies. So with me on the panel, to my left is Safar. He is Director of Client Experience Engineering at Digital Asset. Then to my right is Thomas Moser, who is alternate member of the Governance Board, Swiss National Bank. And then we have Dorian Vincileoni from Kucoin, and she's doing business development manager over there. I think we have the most important experts on the stage right now. My name is Monty Metzger. I'm founder and CEO of LCX. LCX is a regulated crypto platform from Liechtenstein, the small country which has introduced a legal framework, probably the most exciting jurisdiction at the moment for blockchain companies. We run a crypto exchange and a DEX aggregator and a tokenized diamonds NFT platform. We've been engaging with central banks over a long period of time. I've been hosting sessions with the World Economic Forum with 15 central banks. Also, the Swiss National Bank had been part of that discussions. And I can tell you the knowledge and experience they have is incredible. It's not a matter of if, but just a matter of when it gets started. I also want to give you some outlines on what we are talking about. Currently, all money supply physically is around $40 trillion. But this is not even counting all the investments, derivatives. If you would count this in, it would be talking about quadrillions of money. And we will be structuring this panel today around what are we talking about, the stablecoins, CBDCs, the why does it matter, and the how, like how can we improve the markets. Let's start with the what. So what is a central bank digital currency? Over to you, Thomas.
So what's important about the central bank digital currency is that it is a liability of the central bank. I think that's very important for the definition. When Lex asked the previous panel when he asked the audience who owns Bitcoin, that's a question I usually ask at the course I teach at the University of Zurich. I also say, who owns Bitcoin? Then I have a lot of students put up their hands, and then I say, where did you buy your Bitcoin? And they tell me, Binance, Coinbase. Then I say, you don't own Bitcoin. You own a claim on Bitcoin. And basically, that's what commercial bank money is. And that's the difference between commercial bank money, which is a claim to central bank money, and central bank money is the central bank money. It's the claim of the central bank itself. So that might be confusing, but that's the difference, and that's what central bank digital currency is.
Okay, so it's a cryptocurrency, digital asset issued by the central bank.
Exactly, yes. Yeah.
Okay. My experience as an entrepreneur, 25 years of technology, I've seen things like social media starting or cloud computing. But if we talk about money and digital currencies, we talk about power a lot. So I think it's a fight, whether it's privately issued or central bank issued, controlled by the government partly. So there's a change, a shift in power as well. So we'll come back to that later. But over to you, Dorian. What is a stablecoin? How would you define it? There's fractionalized stablecoins, asset-backed stablecoins, and collateral-based stablecoins. How would you define a stablecoin?
Yes, absolutely. Actually, it's a question that has its importance these days with the recent events we've witnessed with UST and other DPEGs that could or are happening as we speak. So stablecoins, there are different types of them. There are cryptocurrencies which are created with the aim to peg to a central currency that's emitted by a central bank, centralized currency that's used in the real world to pay for your groceries, for whatever you want to buy. These currencies, well, mostly these days, most stablecoins try to peg to the USD, but that's not always the case. We have other stablecoins trying to peg to other currencies worldwide. We have Circle actually launching a new digital euro that they are digital stablecoin euro that they will soon be launching on exchanges as well. So this is an example among others. About these stablecoins, you have three main types these days that we can identify, and you really need to pay attention to which type of stablecoin you're using if you want to keep your money safe, if you want to retain the value of your assets. To start with, we could talk about the fiat-backed stablecoins, like USDC, probably the most well-known of it that most of you are using. They basically keep the fiat money in a bank account, and they are audited. People know that they can trust that Circle has the amount of USD to back the tokens they emit in USDC. So that would be the first type, the most simple one, the one that we can trust the most, especially during these days. And USDC you may find on many platforms, especially, for example, on Kucoin, worldwide exchanges. It's very accessible. Then you would have crypto-backed stablecoins. Those would be the ones like DAI, which is managed by Maker, MKR. And once again, a cryptocurrency that's widely accessible that you can find on most worldwide exchanges, on Kucoin and others and our competitors. And these types of backing is different because it constrains you to have much more assets than needed to back your stablecoin for it to keep its peg because of the market volatility. So you have these pros and cons. At the same time, when you're backing with fiat, you know that your peg is not going to go away because you have the assets to back it, you have the cash to back it, but at the same time, you're relying on the centralized agent, which in this case is Circle. And when you have a crypto-backed, you will have more decentralization, meaning that it's a decentralized protocol that will manage your pegging process, let's say. And in this case, that would be Maker. But in the same time, the cons are that you need to really have much more collateral than you need to be sure that crypto market, especially volatility, is not going to take your peg away. And then we have the last type of stablecoin, which everyone wants to hear about, right? The algorithmic stablecoin, or non-collateralized one, which some would argue that it's not even a stablecoin type anymore. So how these stablecoins, this type of stablecoins maintain their peg is actually the same way that a central bank does it. They try to aggregate, offer supply and demand, and they try to modify the supply of the token depending on its demand, just like central bank does algorithmically on a larger scale. The only problem is that you trust a central bank more than you trust protocol on blockchain these days. And that's why you can easily lose your peg with algorithmic stablecoins. And as we've seen, it already happened. It might happen again.
So the current stablecoin market as a whole is a roughly $154 billion as of today, with USDC, the US dollar coin leading, and then Tether as well as the kind of two leading stablecoins at the moment. So, but eventually there are like all different kind of stablecoins, as Dorian explained. Jean, how are stablecoins issued? And you're doing these infrastructure building and digital assets. So, what's the process there?
Well, I'm not too much involved in the stablecoin side of things, but I can tell you about how digital assets. So we build software that allows you to have scalable, private DLT networks and networks of networks, right? Which is key to building CBDCs and commercial deposits and so forth. So we're more like around what Thomas was describing, where we, for example, work on an effort with Citigroup and Settle on building a regulated liability network that can link the CBDCs to commercial deposit, to e-money, and eventually for those regulated stablecoins and other type of coins that are going to be issued, we can link all that in a very scalable and private network. That's what digital produces in terms of software stack.
But now let's turn about the stablecoin topic and the kind of unstable situation which we had been facing. Thomas, what are your initiatives? I heard about Horizon and these like different central bank digital currency projects. Can you describe what you're doing and where do you stand in the process?
Yeah. So interestingly, when the first European blockchain convention was held, there were very few central banks who worked on CBDCs. That's why they found me and invited me. Nowadays, I think there are 90% of all central banks are working on CBDCs, so almost everyone. So when I talk about Switzerland, the interesting thing is that we have a fully regulated live digital exchange. Six Digital Exchange, they're one of the sponsors of this conference. They are live since last year, and they work currently with a stablecoin. What's special about their stablecoin is that the stablecoin is backed with an account at the Swiss National Bank. So most central banks do not allow stablecoin providers to have an account with the central bank. We do if they are regulated. So that's how they work currently. What we could do with them, we could experiment with the digital exchange, issuing a CBDC on their exchange. And the nice thing about that was that it's not a research setup. It's really a live setup. So we had real banks involved. We had international banks involved. We had Citi. We had Goldman Sachs. We had, of course, Credit Suisse and UBS. But we also wanted to have a very small bank involved and see how they can handle CBDC. So we had a very small Hypothekarbank Lenzburg, and that's how we did our experiments. And I think that and we are not the only one. As you said, most central banks are doing these experiments. We have stayed in the wholesale CBDC area, which means a wholesale CBD is a CBDC that is not available to the general public, but only available to basically financial institutions. And that's much easier because you have a much smaller network. You do not have the same scalability issues that you have with a retail CBDC, where you have potentially a lot of transactions, a lot of low-value transactions. But there are also central banks that work in this area, and actually there are 3 retail CBDCs live currently. So it's clearly evolving. We are seeing more and more work on CBDCs, and we see actually first adoptions of CBDCs.
So why did you start working on this topic? Why does it matter for you as a central bank?
So, I mean, there are very different motivations for different central banks. In our case, it was really the emergence of that 6 digital exchange. And if you have a digital exchange, it's still really relatively small at this stage. But I think as a general rule, if you have something that is very important, especially if you have a financial market infrastructure that is systemically important, then you want to have the settlement in central bank money, because central bank money does not entail a counterparty risk like a stable coin does or commercial bank money does. So for us, the question was, if this digital exchange really is the future and will become systemically important at one stage, how do we provide central bank money on a DLT? So that was the motivation for us.
And then you also do projects together with other central banks in collaboration. So there's something with France, I think?
Correct. Together with the Banque de France, we did a cross-border CBDC project, which involved 2 CBDCs. Banque de France issued a digital euro, which legally they can't, but they did for the project at least. And we issued the Swiss franc as a digital central bank currency. And I guess in cross-border payments, it is clear that the legacy system, the traditional system, is very ineffective. So there are clearly huge gains to get. And but as with a lot of these projects, technically we showed in the project, and other central banks too, that it's feasible, it's doable. The main issues are the different regulation, different jurisdictions, and some legal questions. So in our case, the interesting thing about our project was that we had a common platform, but we had sub-networks. So each sub-network basically, for each country, a sub-network. So each sub-network could apply the laws that are relevant to the respective country. So that might be a way forward.
Okay, so let's sink that in. You said the legacy systems are not efficient. innovation might open up new worlds. I often say blockchain is to the money what email was to the letter. So it's a technology which is eventually being introduced into these different sectors. And if we look at the financial markets as a whole, the vision is this ocean of financial markets, of monetary supply. But if you look closer, it's different liquids, from like little oil to different kind of materials which do not mix well. So it is like different layers of infrastructure or silos which are hard to break up. And I think that's why the vision of blockchain and centralized digital currencies could be to actually have global access to these monetary systems.
Yeah.
Yeah.
No, exactly. Yeah.
So, but let's go back to the stablecoin topic. So we talked about central bank digital currencies, which are issued by central banks. And so why are stablecoins important, especially for exchange like Kucoin? Why did you list them?
Well, actually, because there is a huge demand for that. They corresponded to a need of the market. The crypto market is especially a volatile market. And there was a use case for them that was almost self-evident. They were asked by the user base, and that's what's good when you are the people's exchange, let's say, that we always pay attention, take care, and pay close attention to what our community want, what our user base actually is asking for. And in the case of CBDCs and stablecoins, we know that it's a new room, basically. Like, regulations are evolving by the day. And as an exchange, what it means for us is that we have to be the reliable partners of institutions and of our user base at the same time to take care about, well, what's being said from institutions, what they want, what the regulators want, and in the same time to look at our user base, how they want to use it, what would they be interested in. For us, it's a really exciting moment, actually, because nobody really knows what it's going to look like. We know the directions that some central banks are taking for their CBDCs, what their relations are with stablecoins that are already there on the market and available. But all this is changing by the day, and the whole challenge in this environment is to be there as a reliable partner that people can count on. And that's the mission Kucoin set itself for.
And then everybody knows that there's the UST, or was UST as a Terra stablecoin, claimed to be a stablecoin. I think for a lot of consumers, they didn't really know the difference, what kind of stablecoin it is. They thought it's completely safe, pegged to the dollar, and then it lost the peg. What was the impact on Kucoin with that, and how has it evolved until today?
Well, our community was involved in UST and Luna, so as much major exchanges on the planet. So that's true, there has been some loss. The problem is, once again, in crypto, we have this saying, you need absolutely to do your own research before any investment takes place. And the fact that people did not know that it was a non-collateralized stablecoin, so to speak, beforehand, for most of them, is also a very compelling argument for doing your own research. Because if so many people had known that it was a non-collateralized stablecoin, I bet that they would not have put what they considered safe value inside on this network. Like, yeah, I truly believe that at the beginning, there has been an abuse of the word stablecoin everywhere without paying attention to what were the underlying elements of what constitutes a stablecoin, why it is stable, how the peg occurs, what's the process behind it. All these are elements that should be of utmost importance and that have been a bit forgotten throughout the bull market, which is understandable. And unfortunately, bear markets remains like some realities to us when they occur.
Jean, can you describe what are projects you're involved with, stablecoins, central bank digital currencies, and what do you provide over there?
So it's interesting because digital asset pushes the notion of a global economic network, right? So we're going from the ground up, going from an enterprise-grade networks of DLTs, multiple thousand transactions per second, privacy built in. And that applies to CBDC, retail or wholesale, and to all the networks, stablecoins or other coins that are going to link together. So we have, you must have seen announced recently a project in Japan with SBI, for example, to create a programmable digital yen that's going to relate to people's regular account, regular business, with a lot of rule built in the yen as it's going to be distributed to retail customers. So that's one big project that's starting now.
Can you explain a little bit more? So there it's smart money, isn't it?
Yes.
It's programmed.
So it's just starting, but think about the concept of building a lot of rules, maintaining privacy, and allowing you to direct what you can spend, how you can spend the money, and making sure that everything is going through the right directions with all the audit trails for the regulators, for you as a consumer, and for the bank. So it's all linked in, but the details of the project are known. It's just starting right now.
Okay.
And you can, this is interesting because you can apply the same concept to the other project we're doing with the Central Bank of Brazil, the LIFT project, where here the farmers are involved. And how do you facilitate credits to farmers by maintaining the link directly from the central bank, passing through the intermediaries and making sure you create an ecosystem where other services can be offered on top of that through programmable money as well. So it's all linked, it's really linking all those initiatives, stablecoin being just a small part of it, CBDCs, other liabilities regulated so that you know where you can trust, who you can trust. Okay.
But imagine what opportunities are there with like smart money if you give out a loan which is to a certain use case, for example, and it's preventing to use it for other things. So basically you can only spend it for agricultural products and not for
that's
buying
correct.
a new fridge, yeah?
That's correct. You can think of stimulus money or money that you can spend to buy produce in a market, and you don't go and buy electronics, for example, with it. That would be not meant for. So that's how you can do a lot of rules like this.
Yeah. What does the future hold? Just a couple of thoughts and sentences from each one of you. Where will we be in 5 years from now? And what are the kind of growth factors? Dorian, do you want to start? What are your thoughts on stablecoins, CBDCs?
Well, as I mentioned, regulations will be key. And in 5 years, we'll probably have a better idea about what central banks actually want to do with their CBDCs, what place they will leave for private stablecoins in this environment, if they actually will still tolerate them or not. We actually don't know this. It's really changing by the day. The thing is that we see that the world is being more and more polarized, let's say, on certain types of issues, on should there be political, economic. So all these reasons for polarization also means that there needs to be bridge between these different sides. There needs to be bridges, medium of exchanges that none of these sides may control at any time. Because if these bridges do not exist, no actual communication can take place between these two sides, let's say, different sides. So in 5 years of time, we'll probably have these bridges really built and in place. Probably most users in, let's say, Europe, USA, will have a broader knowledge of CBDCs and what they mean. They will be out. Most of the projects that we see right now developing in Latin America, in the world actually, they will be out and we will be using them. Maybe there will be a phase also where we'll still use our real cash, our commercial bank accounts and CBDCs. Maybe at some point we will be having all of these tools together and they will compete. I mean, we will make them compete and try to build a use case and see which ones are the most useful to us.
Right. Sean, your thoughts on future trends?
Right. So first, all I'm going to say is going to be wrong, right? Because nobody can predict the future. What I can say is that, for example, we're working a digital asset with the major exchanges on the planet. Deutsche Börse, the Australian Exchange, the Hong Kong Exchange. And think about the domino effect once they go in production, which is very, very soon. Now, all the equity markets, the bond markets, and all the markets are going to be digitally and on DLTs, and they're going to link to each other with CBDC monies, it's going to be huge. So that's a future where everything is interlinked with all DLT trails on it.
So I think the best way to predict the future is to create it. So then over to you, Thomas. How will you create the future of digital currencies?
So I think we will see continuing adoption of CBDC, but it's going to be first emerging markets, developing countries, not so much the advanced countries. I also see a coexistence of CBDC and stablecoin, kind of like we see a coexistence of central bank money and commercial bank money currently in the legacy system. What I think is crucial right now is the legislation that will come on stablecoins. I think this is kind of a watershed moment right now, and I think the Terra collapse did not help in that respect. So what I think it's a little similar to what we had in the 90s when regulation on the internet started. And there was the big question, is it just a telecommunication service? Do we regulate it like a telephone service? Or is it something else? And I think back then the Clinton administration wisely decided that the internet is something different. And I hope that we will see something similar now for DeFi, because there is a risk that regulation will force DeFi to become centralized, and that only USDC and Tether, those kinds of stable coins, will be allowed, and basically banking regulation or money market fund regulation will be applied to them. That's easy. But if we really want to have the DeFi to survive in a real sense, then we need a new regulation for something where there is no central party accountable for, and that really needs a new type of regulation.
Will there be also, with central bank digital currencies and stablecoins, will there be a new war of currencies or fight globally? I've heard that in smaller countries there's a dollarization. They're afraid that they lose track of their own local currency. And then there's the digital RMB. There's a digital dollar, digital euro coming, which might trigger kind of a new competition to a new degree.
As you say, to a new degree, because we already have that right now. The problem of dollarization you have already now, and that's clearly a competition among different types of currencies. And as an economist, I have to say competition is something good in the end. But it's also true, as you said, that central banks clearly woke up to CBDC after Libra announced its plan. So there is some competition. I call it competition rather than war going on.
And when will you put Bitcoin on your balance sheet?
I think that will not happen for a while.
Okay, so we had a discussion about like global reserve currencies a while ago, and I do see that Bitcoin has the opportunity to become kind of a United Nations of currencies. Everybody who contribute can bring in something. Nevertheless, I do see that there's some skepticism, but a lot of movement going on with central bank digital currencies. I think the project you're doing outstanding. It's needed on exchanges like Kucoin and infrastructure providers like Digital Asset really driving the adoption and education around it. So with that, we talked about this $1 trillion market opportunity. We are now at 150 billion in stablecoins with roughly $1 trillion in cryptocurrency markets. So the future is ahead of us, and let's create it together. Thanks for joining the panel. It was a pleasure. Thank you all.
Thank you.